Okay guys, hope you're well. I've kind of been watching the comments on Discord today, and there's a number around position size, stop loss, splits, and I thought I'd adapt the sheet to see if it can help you. In other words, keep you focused. So let me flick it over and I'll show you what I mean. Okay. So summary's pretty much the same. You know, it'll self-populate, put your notes in. This will all work out itself. Put your starting price here. So start at 1,000 for argument's sake, could be anything. And then work your way through the years. So the top section is just a snapshot of what's going on. It'll tell you whether you've won, lost, how many positions you've took, and it'll work your percentages out. Now, if you are taking wages out, your current balance will reduce. So your gross balance is what you've actually made. All right. So that is the gross. So if you made 1,000, you took 500 out, you'd have 500 on one and sort of 1,000 on the other sort of thing. So that's what that's for. This section is how you target yourself into what you're looking to achieve. Because if you haven't got a goal, you're just going in blind, how are you going to achieve what you're setting out? Because you've got no direction. So for argument's sake, I don't know, say you want to do, you want 5 grand and you want it in 6 months. So that's what you do there. So what this will do for you is it'll calculate how much you need to do per month, how much you need to do a week, and how much you need to do per day to achieve that in that time frame. And then this blue section here, it'll count it down so you can see where you are and what you're up to. Okay. The top section is how you work this out. So if you're looking for a daily target of 38 in this situation, how much is that against the account? Well, there you are, 4%. So you need to achieve 4% on your account every day. Now that's going to ask 2 questions of you. You know, can I do it? Is it too much? If you can do it, fine, happy days. If it's too much, you need to revisit your target, whether it's the amount you're looking for or the time scale you're looking for. So if you say, I don't think I can do 40 quid a day on 50p, because that is a lot. But I think I could do it maybe in 12 months, which means I've got to pull in 19 quid. Right, well, let's work out to see what that is. Right, so we're looking for 20 quid a day. Now that bit's fixed in stone from the start. As you grow and maybe increase your position sizes, that £20 becomes a lot easier. But you still stick to your time scale. You don't change it. You just work your way through it. So it's hard at the beginning, and the more you get into it, the easier it becomes. Now this will tell you how many pips you need to achieve based on the size on splits. So what does that mean? Well, let's just say we're working on 50p for every 500 is your position size. So that would make that £1. All right. And I'm going to sort of split the trade in 2. So I would put that there, 2, give me 50p. If I was going to break it down further, because there are some instruments that let you do 25p, I might say I'm going to break it to 25p. So what this is telling me now is if an individual split was to hit the target on its own, it needs to do 80 pips. All right. So that's kind of what that is. And as you go through madness, etc., you'll understand the further it goes into pain, the bigger the target becomes, and you actually can still hit your target and get out of break even. It's a simple, clever concept, which is, it's just maths, guys. So check the live streams, look for Scruffy Madness in the videos of the Scruffy Squad, and it'll explain exactly how the maths work behind that. All right, so that's your targeting. Then over here is your positions. Now, because I'm a big believer in compounding small accounts and one thing and another, it does it for me. So let's just say we're going to compound every day 5%. So you'll go into the market today on £1 and you think I'm going to have 4 splits, because that's kind of the way I want to work it, and it's 25p each. Whereas tomorrow, assuming that I've hit target, it will be 26p based on the same criteria. So you can mix and match with that. All right. What that does is it helps put realism into your trades. In other words, what you actually have to achieve. Because a lot of the time, I don't think the traders do. They just go in blind and think, oh, I'll just get what I can. It doesn't really work like that. All right. So that's all of that. Then you have your stop. Now, I don't believe in fixed stops. I genuinely don't. You know, every trade is different, so every stop is different. So when I see these morons sort of saying, oh, well, if you do 1 in 3, you'll always be fine. That only works if you have a rigid stop loss, i.e. 20, for argument's sake. But you try doing 20 on the DAX to get 60 in return, you've got to cap it every single time. And it'll take you out the equation every time. Death by 1,000 cuts, what I call that. So you've got to be realistic with where your stops are. And this is why I look at profit and stops completely different. So you set yourself a trading arena. As long as the price stays within that arena, you are comfortable. If it breaks the arena, then you need to start questioning yourself, do I get out or am I going to work to the next level? And if it gets to the next level, I am definitely out because I am wrong. All right, that's kind of the thought process running through your head. So you can look at whatever, and let's just say you think your stop is 60. So you've looked at the market, looked at the structure points, and it's 60 pips away. You've now got a benchmark. You know what your maximum bid is, you know what your target is, and you know what your goal is. So already you're ahead of the game. All right, I'm just going to put this back to £1, just like so. And then you just fill in your balance. So in this case, it's 1,000. And now you've got to think to yourself, how much am I going to take against this account? Now, when you're small, doing 2% is not really going to cut it. You know, you've got to take on risk. It's just part and parcel of small accounts. As the account grows, your risk profile comes down. And why? Because the pain that you'll go through is massive. It gets real scary, real quick. And unless you can handle it mentally, you're going to find yourself on the wrong foot. All right. So let's just say I'm going to do 4% risk. And why? Because it will give me a monetary value to work to. So my risk is 40. Right, okay. And this is telling me that a split is 25. Right, okay. So now what I've got to think to myself is, all right, that's 160 of 25p. I can do a number of things here. All right. I want to keep it at 40 quid. All right. So let's have a look. One split is £1. All right. Put £1 in there. So if I did one split, it's now 40. That max stop is well below, or what it's worked out you can afford on that is 40. So it is below that. Right, okay, so we now need to start working this out. It needs to start dropping down. Why? Because the bid is too high. And it'll just work it out for you. Okay, there you are. So your realistic bid size for all you might want to be at £1 a point, realistically it's 65p. All right. Now, can you split that further? You maybe just be able to do it twice. All right. So it's worked out everything. So what you thought you could do and what you need to do are two different things. So if I put my 65p in there, and then I'll say I'm going to do 2 splits. Right. An individual one has to do 62. There you go. All right. So you can set one trade away to achieve your sort of 62 pips to get your target. And the other one, because bear in mind this is split, you can work it. And how does that mean? It means you've got one that you're holding, and you've got one that as it goes up, get some money out, let it come down, go back in, get some money out, go back down. And you've mapped out your parameters. And that's the idea of these sheets. It's really to get you to think about what you do and why you're doing it. Now, you might look at 40 quid and think, that's too much. I don't want to risk that. So you'll sort of take it down to 2%. Right. It's 20. But my stop loss is 31. If I go beyond that, I can't afford it. But I actually need to be 60. So I need to drop this. So you start working it out. There we are. So that's 33. But you can only do it with one split, and your size is 33. It helps you map out your trades, is what it does. All right. And then if you say you win, I don't know, do your 20 quid, it'll tell you you've won. It'll tell you what the change of balance is, your win-loss ratio, how many pips you've had, and then you would just top in sort of your DAX, whatever it is you're going to do, golden eye, sort of long. Put your mood in, that'll help. Good mood. And then drop some notes in as to why you wanted to take the trade in the first place. Bouncing off a Bollinger Band, bouncing off a moving average, it's on a level. Your stochastic is excessively overstretched. All of these different things. And then as you build up your journal, you'll be able to go back in time and look at it and think, oh, I lost there, but my position size was too big, or my risk profile was too much. And it'll start creating pictures for you to work on. And then when you've got those pictures in your mind, so you do your first month, you would write in here what you're going to work on for the next month. So you might be putting your stops too wide, so concentrate on getting your stops a little bit better positioned. Or you might be risking too much money, so you've got to calm your risk profile down. All these different things, but if you have it in front of you, you'll find that planning your trades becomes a lot easier. But there you go, guys. Very, very simple. I'll drop it in the Discord for anybody who wants it. And if there's anybody putting anything in the coffee fund that's not part of the Scruffy Squad, these are the sort of sheets that you get your hands on. And the coffee fund goes to a good cause, as does the Scruffy Squad. So there you go. So keep well, keep that risk managed, but above all, do what you love and the money will follow. See you all in the next one.